This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And first of all, wanted to wish you and yours a very happy new year. There's a lot going on here in the first session of the new year. Corn off to a pretty darn good spot. Well, we've been talking about that 390 area for the past couple weeks being a significant point. There's been a lot of interaction between the bulls and the bears over the last couple of weeks here. This represented a breakout point in September as well as support in October, both of those on the back of USDA reports. So if we are able to get some good fundamental news behind us and see consecutive closes above 390, I think that would encourage some short covering from the funds. And if you look back at the most recent Commitment of Traders report, you can see that the funds still have a net short position of about 87,000 contracts. Consecutive closes above here, I think, kind of spurs additional short covering, potentially taking us back above that psychologically significant $4 handle. The objective and target we have more specifically in mind comes in closer to 410, an area where you have a key Fibonacci retracement, the 200-day moving average, as well as those October highs. The spot that the bulls must defend throughout the first week of trading and then the next week, 385. That's been the low end of the recent range. On the soybean side of things, they've had a heck of a run here over the last month, about 75 cents. And I think they're starting to run out of a little bit of a juice. Sure, they could run a little bit higher, but there's a lot of resistance up at 970. This was a double top high from October. On top of that, you have the market in overbought conditions, the most overbought since we had that double top. So I would be a little bit cautious up here. If we were to get an additional run towards 970, I think you could look at that as an opportunity to look to the short side with a tight leash. And if you're a producer looking to hedge some crop, I think that would be a good spot to look at as well. Now, over on the wheat, same type of deal. We've had a heck of a run here over the last couple of months, and now we're kind of getting towards these levels that had been previously important for that March Chicago contract. 570 to 575 was a double top high back in June, and again, as with soybeans, we're in overbought territory. So a caution flag here. Nothing to get too excited about with Chicago wheat in the mid $5 range. If you want to maintain a long position in wheat, we think there's probably a little bit more opportunity in that Kansas City contract, and see if we can't look for that spread to narrow up a little bit. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.